I'm Eric Sapanic. I'm going to bring you through a couple of charts here to help illustrate some of the more common questions we've gotten recently, definitely about bullion. So here's our bullion charts over here. We're going to start here by going to the beginning of this pandemic to show you a few things here. First of all, right when the lockdowns happened, we found out really quickly what happens when people get nervous, and that is they panic. We saw that with gold markets. We literally was like almost like a rocket ship going from the 1400 level all the way up to peaking at about $2,069 per ounce. So that was a really big pop, but it was then met by some corrections. Multiple reasons. We saw definitely a lot of ETF trading that appeared to be possible manipulation. We're also seeing that there's more evidence of that now in the news as of recent. Then also, we saw a lot of different money moving out of these commodities and then back in the Dow and then back and forth. So there was a lot going on in this time frame, if you do recall. But the most important thing to kind of take a look at here is in that 2 year span of time, where did the bottom out happen? Well, experts are really looking at this point right here. If I can get the chart to do it for us, and there it is, 1685.57. That was where experts are now looking at to hopefully try to predict where the bottom of this recent correction is. This correction, of course, we saw our peak start here on March 8th of 2022. And since March, we were trading that high, but now here we are at the 1700 level. And then here's where we think we might be right onto something. Here's when this little blip happens here, 1695.50. So very close to where that 2 year resistance point seems to be. We are now going back north again, and this would probably be a really good time for some cost average trading, and we'll be talking more about that next week on how to take advantage of that for our bullion purchasers. For our investment grade coin investors, our customers, definitely it's doing what we were telling you we thought it would do. Luckily enough, it has not been as volatile, and that's really one of the big points of buying into something like coins. But if you can see here, what we chose was the most common coin really that people invest in, the $20 Liberty, the 1904 $20 Liberty, and MS63 grade. The counterpart to that would be something like the St. Gaudens, which has a very similar chart today. But let's see here. So from that shutdown point, we saw them start growing here, and much like the bullion market, took a quick pop. Went from a $1,600 coin to a $2,700 coin, raising more than $1,000 in just a matter of a few months, and it really peaked out there in September. Which was a little bit further down the road than what we saw with the bullion markets. The correction did come as we saw the bullion markets correct pretty harshly, but at the same time the retraction wasn't as volatile, as you can see. And then along the way, we're not really in peaks and valleys as much as we are a real plateau or plane here. And then right here we find ourselves going right up that step to 25.75. And as you can see, this is November 21st. We're starting to really feel the inflation take off at this point in time, and then now we're really feeling it. So as we continue to feel the inflation, look what's happened to the price of this coin. Back up to 26.50, now back up to 27.50. So we're watching these coins right now really take the types of movement that we find to be pretty common when it comes to the supply and demand of the investment grade marketplace. So obviously, or not obviously, but to reiterate that is the pre-1933 coinage. And the fact is, still a lot of buyers, but more importantly, not a lot of sellers. The reason why, most people are not feeling comfortable about the direction of our country or our economy at this point in time. And that is the reason why we're seeing such great stability in this marketplace. So those that are looking to purchase more at this point, and don't want to really feel as much volatility along the way, we would definitely suggest obviously looking into your $20 graded coins, things of that nature. And those that are looking to try to take advantage of big dips, obviously the bullion market would be something that might be interesting if you're looking to do like cost average type of investing. We're going to talk a little bit more about that next week as well. But that's it for me for today on the Gold Spot Overtime. We thank you for joining us. And please make sure that if you want to talk more about this, that you contact us. We're more than happy to chit chat with you about the ins and the outs of these two fantastic marketplaces. Have a great weekend.